Apple, one of the most recognized brands in history. 2 billion people use their products every day. And right now, the stock is trading near its all-time high. So the question is simple. Is $308 a good price to pay in 2026? Or have you already missed the trade? Let's start at the beginning. 1976. Steve Jobs, Steve Wozniak and Ronald Wayne. A garage in Los Altos, California. They built a computer and sold it for $666.66. Wayne sold his 10% stake 11 days later for $800. Today, that stake would be worth over $150 billion. The first decade was chaos. Apple went public in 1980. Jobs was forced out by the board in 1985. The company nearly went bankrupt in 1997. Microsoft invested $150 million just to keep it alive. Then Jobs came back. iMac in 1998, iPod in 2001, iPhone in 2007. That last one changed everything. In 2007, Apple was worth $150 billion. Today, $4.5 trillion. A 3,000% increase in less than 20 years. Tim Cook took over in 2011. Under his leadership, Apple stopped being purely a hardware company. Services, App Store, iCloud, Apple Music, Apple Pay went from nothing to $96 billion in annual revenue. That transformation is the entire story of why the stock trades where it does today. Now let's talk about the numbers. Revenue last 12 months, $451 billion. Record. Net income, $122 billion. Free cash flow, $129 billion. The stock is up 55% over the past year. The S&P 500 is up 27% over the same period. At 37 times earnings versus the S&P 500 average of 22 times, Apple trades at a 70% premium to the market. That premium requires everything to go right. If anything disappoints, the stock reprices fast. Now the bull case, and it's a strong one. In fiscal 2025, services generated $96 billion in revenue at a 75% gross margin. The iPhone's gross margin is 37%. 5 years ago, services was 20% of revenue. Today, 23%. By 2027, analysts project $130 billion. Average revenue per user went from $8 per year in 2018 to roughly $28 today. 2 billion active devices, each one locked in. If you value services like a software company at 25 times revenue, that segment alone is worth $2.4 trillion. Add the hardware business on top, and some analysts argue Apple should trade even higher. Then there's the buyback machine. In fiscal 2025, Apple spent $94.9 billion buying back its own stock, the largest corporate buyback in history. In 2020, there were 16.2 billion shares outstanding. Today, 14.7 billion. Same profit, fewer shares. EPS goes up automatically. Part of the $9.60 EPS forecast for next year isn't business growth, it's arithmetic. But here is where we need to be honest. China is 17% of Apple's total revenue. 85% of iPhones are still manufactured there. iPhone sales in China fell 24% in Q1 2025. Huawei returned with a competitive 5G device in 2023 and took market share within 12 months. This is a structural headwind, not a one-quarter problem. Apple is moving production to India. 15% of iPhones made there in fiscal 2025, up from near zero 3 years ago. The goal is 25% by 2026. But this transition costs billions and takes years. Tariffs added $900 million in costs in Q2 fiscal 2026 alone. Then there's the AI problem. Apple Intelligence launched late 2024. Polished, not impressive. The next generation Siri was supposed to ship in 2025. Pushed to 2026. Samsung's Galaxy AI and Google's Gemini integration are already on competing devices today. If Apple loses the AI race, it loses the upgrade cycle argument. And over 1 billion iPhones in active use today can't run Apple Intelligence. That's either a massive upgrade opportunity or a sign that users don't feel urgency to switch. Then there's Warren Buffett, the man who called Apple his best investment ever, who once held 915 million shares. By the end of 2024, 228 million. That's a 75% reduction. He explained it as tax optimization ahead of potential rate increases. He still owns $70 billion worth, still his single largest position. But 75% is not a trim. Make of that what you will. One more risk. Google pays Apple approximately $20 billion per year to be the default search engine in Safari. Pure profit. No engineering cost. The DOJ is currently seeking to ban this arrangement. If the ruling goes against Apple, $20 billion disappears from annual revenue immediately. What does the market think? 43 analysts cover this stock. 23 say buy. 16 say hold. 1 says sell. Average price target $315. That's 2% upside from today. If you already own Apple, there's no obvious reason to sell. The fundamentals are the strongest they've ever been. If you're thinking about buying at $308, wait for the $260 to $280 range. That's where the risk-reward looks different. This is a 6 to 12% annual return story for a patient investor who wants stability over upside. Whether that fits your strategy, only you can answer that. Thank you for watching. If you found this useful, hit like and subscribe to Beyond the Finance. New deep dive every week. See you next time.